Hello everyone and welcome to the Traders Corner daily market update for the 5th of January 2011, which also happens to be our first market update of the new year. So I'd like to start off by wishing everybody a happy new year. I hope you had a very good festive period and that you're back ready and raring to go for the new trading year. We haven't updated you in a couple of weeks because it was the Christmas period and it's a time that we choose not to trade. It's just a personal preference. We feel like there isn't enough liquidity in the markets, and generally the moves tend to be quite volatile with no real logical direction for the types of trades that we want to take. So we've stayed out of the market over the past couple of weeks, and this is our first day back. So let's, without further ado, let's jump in and see what happened today. Well, we had two main themes here today. The first was the US dollar strength and the dollar rallying, and the second is the euro issues coming to the fray again. We'll start off in Europe and with the Portuguese bond auction earlier on today. Now, it did have a good bid to cover ratio. There was demand for the 6-month treasury bills. However, having said that, the reason that it has a negative tone to it was that the yields went up, which basically means investors were requiring a bit more return for their investment, which indicates that they don't have as much confidence in the Portuguese treasury bills as they would, say, the German Bund or something. So that's a negative thing towards Europe, and that's just kind of highlighting the market sentiment towards these nations and towards the countries that have these debt issues, which is going to spell bad news for the euro going forward. We also had the fact that the SNB, the Swiss National Bank, came out and said that they're not going to accept Irish debt as collateral anymore, which again is another big issue for Europe. What's happening here is that we've come into a new year, and the markets have immediately said, this euro issue hasn't gone away. Yes, we made a few steps last year, but they still believe that there's more to come from this. So they're kind of being a bit cautious with their approach here, which is going to hurt the euro, obviously. Moving on to the US, this afternoon or this morning in the US session, the ADP non-farm employment change came out, and it came out hugely positive with 297,000 versus the 101,000 that was expected, which was is a big number, and it got the markets really excited about the fact that the US could be recovering, and the possibility that we could have a really strong non-farm this Friday. However, the dollar did rally in a big way, but the one thing that sort of took the wind out of the sails a little bit was the ISM manufacturing, which did come out better than expected. Having said that, the employment component of this particular release declined. So on the one hand, we've got the ADP non-farm employment change coming out saying, there was an increase, there was a massive increase. So, if that's an indication to go for Friday, then we're going to have good non-farms come out. And then on the other side of that, you've got the ISM manufacturing, the employment component declining. So you got one piece of data telling you one thing and another piece of data telling you something else. So, the dollar did rally in a big way today. It rallied against almost everything. It could have been a lot more, but obviously the ISM manufacturing came out and took the wind out of its sails a little bit. So basically this leaves us with some uncertainty going into Friday. I know it's Wednesday today, but going into Friday, whereas if both of these numbers came out massively positive, we'd see a rally for the next few days in the dollar. But because they came out conflicting, even though we may see some of a rally in the dollar, against especially the euro, it isn't as much as it could have been. So anyway, that's enough about the releases for today. Let's jump into the charts and see if there are any technical setups that we can exploit or take advantage of over the next few days. Okay, so let's start off by taking a look at the dollar yen. The dollar really rallied hugely against yen, and probably more so than against any other currency, which is actually also providing us with a nice setup here for that old 84.40 level, which we were looking to take a break of last year. And obviously, the market tried this level a few times, came up, bounced, came back down, came up again, bounced off of this level, broke for a little bit, but really didn't manage to to do anything significant. And then obviously over the Christmas period, we've had some aggressive selling in this particular pair, and now it's making its way back upwards. So, initially it looked like it could continue the downtrend of the past 8-9 months, and as I say 8-9 months, we've got the downtrend. If we go into the weekly chart, we've actually, apart from this period over here, we've been in a downtrend since 2007. If we look at the weekly chart. But on the daily chart, we did have that brief spell where we came from down in the 80s back up to the 95 around this level, and then it's been all the way downhill. So taking a look back at the daily chart, as I said, it looked like we could continue that downtrend. However, we have had a reversal over the last few days, and if we get a positive non-farm number, then we could really push above this level. And if we get a break above here, then this could be a huge signal and a massive trend change in the dollar yen, which we believe is also supported by the fundamentals. So, all in all, this looks like a good pair to trade, and we're looking to take a break above this level over here. Taking a look at the euro dollar, we actually had a setup here from the going back to December. What we have is on the 4-hour chart, we've got the market swinging down. It's moved back up to a level of support, and this previous level of support, if we actually go back in this chart and zoom out a second, you can see that it has been used in the past many times. So going back to, when is this, 10th of February, so February of last year, this level was significant, and the market's moved down, it's come back up again, it's messed around with this level. When it came down, it found this level as a support level, bounced off of it, came back through, and when it came down to here, we drew in our Fibonacci retracement. So zooming back into the chart here, the euro dollar is kind of been bouncing off of this level, not really making further moves down, which is what we were expecting. Excuse me. Not making the further moves down, which we're expecting, coming back up to this level, and every time it came up to it, we've been selling this particular level here when we get the right technical setups. And yet again, what happens there is the market was moving up to this level. We had this marked in our charts, and if we drill down to the 1-hour time frame looking for our entry, and you can see that we get the move down, we get a little bit of a pullback, and we were in on a break of this, so we're actually short the euro dollar at the moment. As I've said in the past, just a quick note about levels, they don't have to be to the pip, okay? They can be a couple of pips below or a couple of pips above a particular level. The important thing is we're looking to identify, obviously, first of all, strong levels, but also levels that other traders see. And all we need to see in the price action is price react around this sort of level. It does not need to be to the pip. It just needs to be around a certain level, which can give us the confidence to get into the trade. So even though you may say, well, actually didn't touch this level over here, that's not important to us. What's important is we got price action around this level, which enabled us to get in on a short below here. We got a similar setup on the pound dollar as well. Not quite as strong, but set up all the same. So we've got previous resistance here. We've got the swing down from this point here, coming down to this point here, and a retracement back up. And again, you can see that when the market briefly retraced, it hit that level again and bounced off of it. So when it was coming up to this level, again, we're looking for an opportunity to sell. If we jump into the 1-hour chart, you can see that we actually do get this opportunity here. We get a move down, quick move back up, and we could be in on a break of this level here for our profits to the first support level around here. As I said, not quite as strong a level as the euro dollar, but a setup all the same that was there for the taking. And then moving to my favorite setup of the day, which was the euro Aussie dollar. Now this pair, if we even go into a weekly, we can see this has just been in a downtrend for the past couple of years, so there's nothing stopping this particular pair at the moment, and nothing could get me to buy this pair in the next few days or weeks. I'd really need to see a significant trend changing pattern to allow me to start looking for shorting opportunities in this particular pair. But anyway, as I for buying opportunities, sorry, not for shorting opportunities. So we are in a downtrend, so we're looking to short this particular pair. And what we get here is we've got a downwards trend line drawn in from this point back in November, sort of containing this price action over here. We've got an area of support where we see the markets come down, bounced off of a level, come down, bounced off of it again until it eventually broke it. And then we've got the Fibonacci retracement, which we can draw on from this particular high here down to this swing low here. And what we got was a confluence of levels. Now, as I said, we're not looking for to the pip levels. We're just looking for price action around these sorts of areas to confirm that the markets are also looking at this particular level, and hence we can trade our technical setups from here. And as I said previously, we like to look for a confluence. So if we see a couple of lines together, then that makes things stronger. So what we get here is the market moves back up. It moves to the 61.8 fib retracement level, which happens to coincide with the trend line, and is maybe 30 pips away from this support level here, support which could become resistance. If we drill down into the 1 hour chart, you can see that we get a beautiful 1, 2, 3 reversal pattern. So the market's been moving up on the 1 hour, moves down, comes back up again, and then breaks this low, and we would have been in for a break of that level there, trading into the short side. That's sort of it for the moment with regards to the technical setups that we have been looking at, or we have been taking. Obviously, it's the first few days of the new year. Britain had a bank holiday yesterday, so we're really back today, even though the US have been back for a couple of days now. But it will take a week or so before we start to see the real trends emerge, and the real positioning for 2011. So what we're looking to do for this particular week is just sort of take the bounces of the levels and look for some quick profits here and there, but we're not anticipating any huge trends emerging within the next day or so. In the next couple of weeks, certainly that's what we do expect, but in the meantime, looking for a few breaks or bounces of some levels for some short-term profits, with a view to next week looking for some of the longer-term stuff. But anyway, I hope you enjoyed the daily market update, the first one for the new year. Obviously, we'll endeavour to get as many of these out as we can. It is meant to be a daily update, so obviously you should get it on a daily basis. But as you're well aware, we're only human, so there are times when it's just not possible. But we're going to try and get as many out as we can over the next year. And if you keep visiting our website and everything, you'll see content updated there on a daily basis, trade ideas, analysis, etc. And we hope you continue to be part of our community. So thank you very much for listening, and we'll speak to you tomorrow. Take care.